Hello. Okay, we're live. I just want to quickly show you, this morning was the time of a wonderful market maker model. If you're not familiar with it, the market maker models are some of the most powerful, some of the most beautiful structural models that there are. They come from the ICT School of Trading. I want to show you all the confluences that oh, you can see some of my trades. Interesting. Yeah, that's what I took. You can see I had annotated some ideal targets and then some real targets. I wasn't planning on showing this, but so also new style, new theme. Let me put the music a little bit lower. So I can't hear my voice. Okay, so we have been coming down overnight with a peak of previous day high at the close of yesterday, and then we started to come down aggressively. It was a moment of plateau, and then Asia session starts at 8, starts to climb up, was up into the new day, opening gap again, and as a move down, we get to the midnight. Price starts to pick up momentum. They're trying to decide what to do. The sort of accumulation, manipulation, and distribution. So generally, market maker models have a phase which is a phase of accumulation at the start. I might have spoken about this already, I think. And then what happens, like people that can actually move the index, from let's say a group of hedge funds or the market makers, want to reprice themselves so that they can reposition themselves so that they can make money. So what they do, price is engineered to move down. There's a final accumulation of orders, reach a point of interest where most of the money is going to be reloaded, and then in two phases, they reaccumulate until they distribute, in this case at Asia high. There's many traders talking about market maker models. First one is ICT himself. I recommend you looking into it. But I want to show you the confluences of this, because they are. So I had the sense that this would happen. That's why I took those trades. But you never really know until you really know. And generally, that's too late. So here are the confluences. Now maybe this gray should be a little bit wider. Okay, so as we were coming down, and we did create this nice accumulation around here, we came back up, and then this was 3 at 3, and then generally there's a last manipulation over which you can draw an extension, a Fibonacci extension, and price likes to go back to specific proportions, specific multipliers of this last manipulation, and generally the number is 3.5 to 4 or 2 to 2.5. So we did this last manipulation. Where did we stop? Okay, let's count the confluences at this specific stop. There's a touch of the last week, new week opening gap. For a few weeks, those are sensitive points in price. There is the Fibonacci level of 80%, 79, however you want to call it. If you draw it from here till the end, so the beginning of the last run from here until the previous day high, this retracement stops at exactly, almost precisely 79 or 80%. That's what's called in ICT parlance the optimal trade entry. And in fact, at that moment, we do this market structure shift. In market structure terms is a flip, and we come to retest. But you can also call it a breaker. This is a breaker. The up close candles before the last down move. That's what's called a breaker. The breaker holds the price, and then we have a move up. Where do we stop? Well, we have a target is new day opening gap of this week, of this day. Asia range high. Projection of standard deviation 3.5. Yeah, and what makes it even cleaner is that you could have just foregone and let price do it, all of its thing, and just enter for the final move, which is the most violent and generally the highest probability one. And where would that be? Well, okay, so this is a first reaccumulation. This is a first reaccumulation. And then there's a move that's very violent that starts at 6:05. What happened at 6 is the close of the 4-hour candle. So if you see this candle in gray is a 4-hour candle that closed at 6. If you check this pattern, so that had been an open with no top, by the way, which indicates the price was in a rush to go down and we'll have to come back up. Then we go to create a minimum, we close, we open, we go down, we go up, and we close. What's the next leg gonna go? Will be a small retracement, which in this case ended here, and then up. So at the close of this candle, you could have anticipated a move up to where? To at least, 3.54 of the Asia range, or the Asia range high, and you could have got the 30 points. The highest probability, really the highest probability trade was at the close, at 6 a.m. Close of the London session, and let's say start of the London lunch. Or maybe the start is at 5, don't remember. Anyway, this was beautiful. I took a couple of trades here. I was happy, but because my target was at least 2.5, and I was waiting, so my most secure target was these lines. These are equal highs. That's what I was targeting initially, but then it was below 2, so we could have held until Asia high, but basically, and I didn't. At one point I was done with London. Right, that's all for that. Now I'm trying, let me just fade the music out, because it's annoying me. And maybe remove the headphones, because I can't hear myself and it's a little bit annoying. Okay, now I hear myself. So I'm not gonna touch anything until this time I would like to wait until after 9:30, so 10. I gave you an explanation of the market maker model. Let me put a curtain up if I need to cut this video. And actually, let's see each other a bit later. So I'm gonna pause this after this 10-minute intro about what happened. No, we'll make an assessment about what's going to happen next, but let me pause for now.